D7 here with Grok Trade. Been trading in live markets 27 years using technical analysis. I run a private hedge fund nowadays and own an education company. Education company that I own is for stock trading, and I want to get into the markets here using technical analysis. Feel free to subscribe if you like the information that you're seeing here, but I'm going to start off on the monthly chart. I'm going to go very basic here and walk through a lot of things. It's going to be highly educational. For some of you who's more advanced, you may want to watch this in fast mode. What we're looking at here is this upper chart here is candlesticks and and you'll see these blue lines here. I drew those lines. Those are trend lines. And then you'll see these little lines here. These are moving averages underneath coming up. And you can see these moving averages, you know, they're just lines coming up. Underneath that, you have the MACD, you have the RSI. These are called indicators, and then a personal algorithm down here that subscribers can have access to. And I'm looking at the SPDR S&P 500 ETF exchange traded fund. This is the S&P 500 blue chip companies, or 500 blue chip companies. Gives us the best barometer of what's going on out there in the markets as a whole. The reason I do an ETF is because it gives me the volume too. And these bars that you see down here are the volumes to each one of these candlesticks. Each one of these candlesticks is 1 month. If I zoom in here on the monthly S&P 500, you'll see a couple things. You have red candlesticks, white candlesticks. The red candlesticks are bearish. The white candlesticks are bullish. The bullish are white. They're filled with air. They're balloons that go up. The reds are filled with blood. They're going down. And this, each month, we get this print on, was it a down month or an up month? Up month, down month, up month, down month. And then the month that we're at right now, we have one more week left. So this is still a moving candlestick. This is not static yet. It's what's called dynamic. It's a dynamic candlestick. At this moment, it's what's called a doji. This doji is caught up within the moving averages. And again, the moving averages, this line coming over, this line coming up, this line coming up. We're in those moving averages. Look at moving averages like sticky spider webs. When price action gets into, when I say price action, these candlesticks get into those sticky spider webs or those moving averages, it's hard for those candlesticks to get out of it. So for example, we're bouncing off the top of this spider web or this moving average, and we get caught up in it and we stay in the moving average for a while, and then we drop down into more sticky spider webs. You see that? We're caught up in them. And we can't get out of it. You see how we're just caught inside them? We're caught inside. It's trying to find a way to go. So underneath that, you'll see volume. That's our volume here, our blue. So each one of these candlesticks represents the volume, how much trading took place. So we have a lot of trading taking place on this candlestick, and we still got a week to go here in March. So there's a lot of volume here on this candlestick. These last few months were decent volume, and they're done already. This one has far more volume, far more trades taking place, and we still got more time to go. And underneath it, you'll see the MACD, RSI, and this algorithm. Now, if I zoom back out on the monthly chart, you'll also see that I have these percentages over here on the side. This is called a Fibonacci indicator. So I went from the bottom of this big drop, you see that shadow right there, went to the bottom of that and drug it up to the very top right there. So that's the 0 line. Down here is the 100 line. We dropped back, or we pulled back, the markets did, all in 2022, okay, which is very bearish. 2022, we drop. And in this drop, it pulled back to the 50% Fibonacci. That is a very traditional place for the markets to draw back, 50%. 50% is a very traditional place to pull back, and then buyers will come in and it should go higher. It doesn't always. You don't always pull back to 50%. You could pull back 20%. You could pull back 75%. You could actually pull back 100%. So again, we started here, we go all the way up, we pull down. Could it go from 50% down to 61.8 or down to 76.4 or down to 100%? The answer is yes, it can absolutely do that. We don't know where. these Fibonacci levels just tells us areas that we could be getting buyers coming in. Now, if I zoom way out, the other thing that I put a lot of attention to, and this is because I've been trading in the light markets 27 years using technical analysis, okay? I didn't used to use trend lines as much as I do today. Trend lines are very important. So look at trend lines as kind of like the ceiling and floor. We hit the ceiling, it's like a ball. If you bounce a ball to the floor, ceiling, floor, and it bounces back and forth. That's what's happening here. So we hit the ceiling there, we hit the floor there. Do you guys see this? We come up and hit the, well, we bounce on the floor a few times. Look at this. The ball doesn't go back to the ceiling. Hits the floor, hits the floor, hits the floor. There's no ump to it. Hits the floor. This is 2020. This drop here was the Corona crash. And hit the floor, and then it rallied straight up after that. It rallied up from 2020 to 2022, just a straight up run, hitting the ceiling again. So the ball went up, hit the ceiling, and now it came crashing back down. What's interesting is it hasn't made it down to the floor yet. It's making this new floor where it hits and bounces up. Do you guys see that? So I draw another line. So I have this line going up and this line going up. So this pattern here is called a rising wedge. A rising wedge is more bearish than is bullish. In other words, it's more bearish. It has a better chance of dropping than going up again, but it can still go up. We don't know what directions from month to month, week to week, or day to day, what the direction will be. We only play statistical odds using technical analysis. So looking at this, what I know on the monthly chart, on the grandiose 35,000 foot level looking down, is we're in this huge bull run where the markets go in the lower left to the upper right, big move up, year after year, decade after decade. But every 5 years or so, in this case, 11, 12 years, you'll get a major market correction. And it's very healthy for the markets. We want to see a 50% pullback. We are at a 50% pullback right now. Okay, 50%. The question is, will we drop more? And I want to analyze this a little closer. Now, just to clean this up a little bit, I'm going to get rid of the Fibonacci's so it cleans up the chart a little bit. And you'll see that I got a couple horizontal lines coming across. Big one there. That big one goes to these monster swings. Right there was 2000, and this was 2007. Major areas of resistance. And so if we ever get back to those areas, that'll be a big area of support. That's why that's there. And then we have this area coming across. But if we're zoomed out, here we have a big rising wedge. And when I look at price action, I hit the floor, we pop up, we hit the floor, and then floor hits the ceiling, and we come back down and we pop up, but we're not popping up immediately to the resistance line here. So it's hanging out on the floor. Do you see this? It dropped. It didn't hit this floor. It made a new floor, but it's finding support, support, support. It's staying there. So it's dropping, and it almost looks like what's called a bear flag. Do you guys see this? It's down, down, down. It should have done a touch and go where it hits, bounces. It didn't do that. It hit, it started to bounce, and then sideways, sideways, sideways. I call this a railroad track, where you get a white candlestick. Let me really blow this up. I want you guys to see what I'm showing you here. This is highly educational, unlike a lot of my videos. I just kind of rapid through this, but I want to teach on this one. We bounce up, white candlestick, red candlestick, white candlestick, red candlestick. Chances are we'll have a white candlestick here this month. Wouldn't surprise me if we end the month where we're at now or a little higher. But that is more bearish than is bullish. Anytime you get this white, red, or green, red, or white, black. Those red candlesticks can easily be black and mean the same thing. These white candlesticks can easily be green and mean the same thing. But because 20% of all males are colorblind, I do white and red, so instead of green and red, because a lot of people can't see the difference between the two, and that's why I do this. All right, now, with all that said, We got price action. The candlestick's caught up in the sticky spider webs. It's hard to get out of. We have a trend line, and we're stuck at the trend line. We're not going straight up. And so on the big view here, that's more bearish than it is bullish, okay? Now, the thing I want to show you here is the MACD. Now, MACD is it's called a centered oscillator, but it's an indicator. But what's important on the MACD is this. I'm going to blow this up so you can see it. You have two lines up here, and then you have a centered line. This centered line is our zero line. Do you see this centered line? So the question is the line above this line or below this line, okay? If you're above the line, that's bullish. If you're below the line, that's bearish. We're bullish, 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 and now we're heading down, so that's bearish, 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 and then we broke down below this line, really bearish. Now the question is, did it drop, and is it heading up, and is it rolling over? The only way to know that is if the MACD line and the center line, are they getting closer together? They are here. Just like what we saw up here, when the lines start to cross over, they get close and cross over, and then you get a reversal. Same thing here, we're going up and they're getting really close, almost like it's going to cross, getting a reversal. And so this will go down, 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 up, 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 and then down, down, down again. You can also look at the histogram. Ticks are getting shorter or smaller. Because of that, it shows the distance between the lines getting smaller. So in other words, what am I saying here? What I'm saying here on the MACD is in negative territory. We're in the bear side on the lower side of the zero line. And we're heading up to a resistance area, the zero line, and it could be ready to drop. So what I like to look at is go back in time to see if I can find this pattern anywhere else and see what did it do after the time of this pattern, okay? So I found it in 2002. If I look here, it's here. Do you see how we're here? Let me do this and blow this up. All right, so we're dropping, 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 just like we are now. Now, this is not 2022, okay? Guys, I want you to look at this. This is the year 2000, 2001, 2002 area. So we've been dropping, 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 just like we are now in 2022. We had this big drop. So we got this big drop. The question is, will we drop more? Here's what I want us to look at. If I zoom in here, I want you guys to really see what I'm showing you. So remember this MACD, and I said when they could get to the zero line, it comes up, up, up. We're below the zero line. We're up, 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 and it's starting to cross over. And if it crosses over and drops, you should get another leg down. So remember us talking about that. So with this example that we're looking at, we're up, up, up. Is this going to drop down? If so, that means this is going to be dropping down. And let's see what happens. We just march it forward and we get a sizable drop here. Big, big, big drop. And then we start to cross over like we're going to head up here. Let's see what happens. Yep, we're crossing up. We're crossing up. That could be our bottom, and could it go up? Now remember, each candlestick is a month. So each month is what I'm marching forward. Nope, still had more drop to do. And now it's up near the zero line. Do you see the MACD? It's up near the zero line. It's popping, and we're now over the zero line, and we're in bullish territory. And look at this run, guys. Just a monster run. So the S&P 500 went from like the 80 mark up to 115 mark. So the reason I share all that is because that's precisely where we're at right now. If we look at this, we had this big drop just like we did in 2000, down, 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 down. And we look at the MACD, it goes up, 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 but it's ready to cross over to drop. So that means this thing should drop. If it does drop, guys, if it does drop, it will make sense because this is a rising wedge. This is the ball that hits the floor, ceiling, floor, 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 floor. It's staying down there, and this thing could break this area of support and then quickly get to this level of support. So in other words, the S&P 500, the spider, could get down to the 350, 349 area pretty quickly if it breaks that support level, if it breaks the support. A couple things that it has going for it is the RSI. The RSI down here was very oversold right here in this area. Do you see that? Very oversold. We're in oversold territory. So that's telling me that this market, that's oversold. Even the algorithm down here, this is the Grok algorithm, has a couple buys right here. It had a buy here, had a buy right here. So a couple buys right there. And the last time it had a buy, look at this, just boom, straight up. So we have algorithm saying buys, we're oversold. But I'm showing you the MACD saying this is all a farce, that we're going up. This is a big rising wedge and we should drop. Now, the thing I look for is go down a level. So when I go down a level, I go over here to the weekly chart. And on the weekly chart on the spider, okay, so each candlestick, each one of these bars is 1 week, okay? And on this, if you like this education that I'm giving you right now, share it with a friend or definitely subscribe. If you like the content that you're getting, it might be worth subscribing because we keep doing this. Don't miss out. You want to subscribe if you don't want to miss out on this stuff. So this is a current live chart of what's going on in the markets right now. And let's analyze this. Are we caught up in the sticky spider webs? 100%. We're in the moving averages. We're caught up. Now, on the weekly chart, the moving averages are acting as resistance. All of them have coiling together. We went higher to resistance, and we got a bunch of sellers come in at that resistance line. It drove it right back down, and now the moving averages are all acting as resistance to the current price for the week, okay? Now, when I zoom way out, guys, very, very important when I zoom way out. When I zoom way out here, what I'm looking for is the big pattern draw on the trend lines. This is called a symmetrical triangle. Symmetrical triangles can be bullish and or bearish. We don't know. What we do know is it builds up a ton of power. So anytime you have trend lines coming together like this, okay, and it pinches, the more it pinches, the more power it builds up. We are tightening a coil, and the tighter we get into the apex, the tighter and the more powerful it becomes. So this is a lot of power taking place, and we're seeing a spike in volume. If you look at the volume down here, you'll see a line. This is a moving average on the volume itself. Anytime volume, these bars are lower than that line coming across, that's low trading volume. Anytime it's higher than that trend, the moving average, big trading value, and it's telling big trading volume, and it's telling you the value of this move or these candlesticks are legit. There's a lot of interest here. So what we're seeing here is an increase of activity taking place, a lot of fights with bulls and bears. This is a really difficult time to trade in the markets, guys. I can't express enough how difficult this market is for swing traders. When you have one up month, one down month, one up month in the monthly charts, and then you get this choppiness week after week. Even in an up leg, you get red candlesticks in a up leg. This was a nice smooth down, but the up, you go up, 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 red. But coming down, you get these reds and a white and a red and white. Very, very choppy in the moving averages. Anytime you get into moving averages, you get this up and down movements that are just, nice, clean moves. So we're starting to see this chop, chop, chop taking place. But remember the MACD, anything above the zero line, that's that zero line coming across here. When you're above it, that's bullish. And it can be support when it gets to it, and it bounces up. But look how we're below it now. We're below it, but we were below it last time and went back above. We're below it this time. We got a crossover. We got a bullish tick on the histogram, meaning that we should pop higher. If we do not, if we immediately come back down and we get a negative tick here and it reverses and starts to head down, this could be a nasty run to the downside. Like if I were to really zoom out here, you can see that MACD can get way down here. Do you see that? We're not even close to that level that it could get to here. And speaking of that, look at just those two swings. Look how low the MACD has gotten on those two swings. we're way up here. There's a lot of room for the markets to drop here. Now, this thing could easily pop higher. We could definitely go higher on a symmetrical triangle. We can go up and or down. What I'm seeing here, though, is an argument that we're not oversold here on our side. We're just neutral here. We're just neutral here. We didn't get a buy signal down here on the weekly. We didn't get a buy signal. It's going into neutral ground. So what I have to do is go into the charts and say, are the moving averages, are we in an apex? Yes. Are we building up strength? Yes. And we're seeing that on volume. It's ramping up, guys. Anytime you see volume ramping up, that's like you're pushing the gas down on your car but holding the brake in. This thing is not moving anywhere. We're just going sideways, but the gas, we're like revving the engine. This thing could be ready to pop really, really soon. It won't take much for this thing to pop one direction or the other. So there's the weekly. So now I want to go to the daily. This is where we really get honed in to what's going on. So if you look at the daily, what do we see at 25,000 foot level? A big symmetrical triangle. We hit floor, we hit the floor, we hit the floor, we hit the ceiling, 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 then we hit the floor, and then we hit the ceiling, and that's where we're at. So if we look at this dropping, somebody could argue that this is either a bull flag off of this big run. We get the pull here and a big bull flag. The problem with that is it went down too far. If I draw a Fibonacci, we're down at 76. So because of that, it's too deep for some of you, okay? I don't want to say that, but that breaks up the bull flag thing. But then you can say, is this a bear flag? And so we switch it, and I go up here to the top, go to the very bottom, and we can say this has got up right to the 50. Do you see the 50? It went up, 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 right to the 50 and stopped. So that would be a good place to drop here, guys. And it's like, whoa, that's interesting. On the daily chart, the S&P 500, we're at major resistance, but will we go higher? If it's a bear thing, it's going to drop the next few days, hit this support, break through it, and then break through this one and head lower. Well, if I look down at volume, remember how I said anything over the volume line was really powerful? This looks like capitulation, like, hey, there's a bunch of buyers coming down here that will allow us to that there's buyers coming in that will say, boom, let's do this to the upside. And I got to pause the video real fast. Janelle's in the office with me, needed a key to get out. We're doing this on a weekend, so everything's locked down here in my Tampa Bay office. So anyway, have you liked it yet? If you haven't liked it, just take a moment and like it down at the bottom. But so here's the thing, it shows capitulation, meaning that there's a lot of chance that we've been dropping here. Could this be buyers getting ready to go higher and explode this higher? The answer is yes. That could be set up to happen here based off of this. Then I want more data. Let's go down to the MACD and say, what does the MACD show us? What we're below the zero line and we're at resistance. So if it drops there, like the last time we were below the line, we go up to resistance, it dropped. What happened? A major drop. So we're down here, we go up to this. If this could be ready to do another drop. It could break through. I mean, well, hold on. First, we went below it. Do you see this? We come up to the line, and then we dropped. There's the drop, okay? But this time, it went up to the line and broke through the line, and it went way higher. So it could get the line and then break through. The problem is we came up to the line, and it's caught up in the line. If I zoom in, you'll see this. See how it's going flat there? You don't see that a lot. That flatness at the zero line of MACD just means there is a ton of indecision. Guys, remember I was saying it's really, really difficult. Look at the last 9 to 10 months on the monthly chart sideways. We haven't broke out of this range in a long, long time. The weekly, we're coiling into a big symmetrical triangle. We're in the apex. This has been crazy times. As swing traders, algorithms we don't see this sort of action very often. But I mean, look at this. Look at just the jagged moves here. Like, just to put this into perspective, let's just take the last couple weeks. red down, and then we gap way down. Do you see this? We open way down, we go up, and then we gap way up, and then the next day we gap way down. These are the opens, right? And then we gap up, run up, and then we gap way down. I mean, these gaps are insane that we're seeing. We go down. We should be opening where we close. It's very traditional to do that. But then we have this big gap up, and we come crashing down, another gap up, come crashing down, and then a big gap down, and we go rallying straight up. These gaps are just chewing people alive. Look at these: gap down, gap down, gap up, gap down. That's what you get when you get into these moving averages. You get these just like when you get in here, look at this up, down, up, down, up, down, just very, very just choppiness taking place. This consolidation causes these whipsaws and these just crazy stuff. So give yourself a little leeway. Take fewer trades. Know that this is an anomaly. Wait till the markets start trending up or down again to find normalcy, that we can all find easier trading environments. Okay, those will come. Just be patient. It's been a hard 9 months. It's been a hard few weeks. Just know that this is craziness taking place, but it's all traditional. Or when I say traditional, it's the norm in sideways trading markets. This is a lot of them is called consolidation or trading ranges, but they also call it just congestion, right? You could call it that too. So that's where we're at. Quick look on the daily. If you look here at the NASDAQ, NASDAQ is in this nice uptrend, way up, up, up. MACD is starting to roll over here. It might be ready to drop. If so, we'll draw a line and we'll go into a symmetrical triangle. Okay, we could see that. IWM has just been killed down, 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 but we're way in oversold territory. But look at the MACD, way here, we're up, up, up. I mean, we don't want to see this roll over and drop again. Will we pop back up here for a few days and then drop? Yeah, but we're below all the moving averages. See these sticky spider webs? We're not caught up in them here. We're below them, so they're acting as resistance now. XLF, which is the financials, is down, 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 down on huge volume. This could be capitulation, meaning that's time. This is buy time. See the volume? Huge volume, guys. And we're very, very, very extended to the downside. RSI is way oversold. So this would be like a great place to be looking to buy financials. That means the market should go higher. But woe to the markets if it starts to go higher and we find resistance and we immediately come back down. Because if we get any sort of bullish move this next week, what will happen is we won't be oversold anymore. And it will set the markets for another wave to the downside. That's what it will do. So we even had a buy take place here on this level. Even though it said a buy, it still drifted low. It shows how, and now we're up here in the sell zone down here. So the algorithm is like, whoa, what's going on here? We're in a sell area, but volume is saying capitulation, buy area, RSI saying a buy area. So there's all this confliction taking place. Moving averages are saying we're at resistance. This is bad news. We're just trending down. So that is what we're looking at. Quick look here at the US dollar. If you look at the US dollar, we're down, 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 down. This is a buy area. MACD is crossing over, getting ready to go higher. Look for this to bounce higher. That'll put pressure on the markets if it does that. But gold, if you look here, this is the time to be taking some profits. I think we're way up here. The MACD is starting to roll over and drop. We're overbought on the RSI. Gold and silver, just be time to be taking some profits. Take your profits. You had a nice run here. Take some profits, let it drop back down, and then reload on that. You can see we had buy areas here, buy and then a buy, and so buy areas, but we're in the sell area here. If I were to go in here and turn on the sell, you can see that we had a sell area and then a sell area. So we have that sell area going on right now in this area. So a couple things. VIX, if you look at the VIX, we spiked higher last couple weeks. I mean, we were up in the 30s, just craziness. And look at the last 3 days, just up and then down, up and down. We're at 22 at this moment, or just under 22. Now, this was a long one. If you're still with me, say you made it. Very few people will have made it this far. And if you say made it in the comments, only you and I and the others who made it will know what we're even talking about. But this is an unusual one that I went into just 101 mode. We have 101s. If you go to freeonlinetradingeducation.com, I should say that slower, freeonlinetradingeducation.com. And if you do that, there's the 101 course. You can do that at Grok Trade. You've probably seen Grok Trade a few times on the screen. Grok Trade, you can go there, take the 101 courses. It's a basic way of just saying, oh man, I'm interested in this trading. And if you're happy that you got this far and you like this education, don't miss out. We keep doing this. Feel free to subscribe. Love to have you. And we love the comments. As you know, I heart you guys. I read these. These are, when I read them, I'm reading them. It's me reading those and me responding, not somebody else, okay? So I enjoy connecting with you all. And congratulations for those who actually sat through all this and you're a beginner trader. Your head's spinning right now. It's like, whoa, I don't understand any of this. Congratulations for just sticking in with us and learning this, because it's like learning a new language. The more you listen to it, the more you'll pick up. Every time you watch one of these videos or somebody else's videos, you're going to pick something up. Just know that the secret is there's a lot of trading books out there, a lot of trading gurus out there on the interweb. Just know that it's a lot of data. The secret is not more data. The secret is the simulation of that data. So anyway, you can do our 101s, jump into our 201s, doing our 301s. We have one coming up. If you want to do mentoring with us and best to get in on the 201s and the 301s, we can get you in next weekend. And just go to and look for mentoring at Grok Trade. Love to have you. Take care, guys. We'll catch you later. Bye. Guys, why are you still here? You're supposed to be gone while I still have you. If you haven't joined the 301 mentorship yet, seriously give that some serious thought. Mark the Meerkat's been trading a long time in the markets. As you know, I have too. We take people under our wing and we teach you what we do to trade in the live markets. We trade a significant amount of money on a day-to-day basis in the live markets ourselves. If you're going to learn from anybody, learn from us. It's the 301 mentorship program. We've been doing this a long time, and we're happy to help you. The algorithms, that's a no-brainer. Get in on that. Let the algorithms help you down the path. Education with specialized knowledge with trading algorithms makes you unstoppable. There you have it. Now, get out of here.